Welcome back, folks. All right, this is a New York lunch macro trade, and we'll cover all the details as we go. I'm going long here also on an immediate rebalance, so you can see how that came down, closed in, and I'm annotating the buy side balance, sell side efficiency, and we're inside of the 1050, 1110 macro, and that is the high I'm aiming for. Okay, and I'll tell you why as we go along. So I want to see price stay in the upper half of that blue shaded area. I'm bringing the stop loss up because if it goes down there, I'm wrong. All right, so we have the top of that blue box right there. That would be a wonderful area to add, but this position is too big for any more additions because of the volatility today. It's extremely volatile, very, very fast market. I was not able to be with you all today because of some rules, obviously. Whenever we have a large down day, the very next trading day, I usually try to avoid the morning session. And it didn't really give me a first presented fair value gap set up this morning. So that's the lunch macro buy side liquidity I'm aiming for. And I'll tell you why in just a few minutes as to why I'm selecting that high, because there's rules to it. And this is another inversion fair value gap that I believe that once price gets above it, it should support price and then run up into that lunch macro buy side liquidity pool. Notice the blue shaded area I was entering on the candle that came right back down to the low of it and creating an immediate rebalance. That means the candlestick prior to the bullish candle I was trading long in the retracement of, it touched its previous candle, and it's also the low of the previous buy side balance, sell side efficiency. So what I'm watching here is, does the market want to stay inside of the previous candle's wick, which is ideal and optimal? Anything above that inversion fair value gap in orange should set the stage for another run up into that 10 o'clock hour high. You see how those candlesticks are basically the same low? And we just swept it a little bit, so now I want to see it really aggressively run higher. No need for it to trade back down into that bullish fair value gap in the form of that blue shaded box. It's acting when I entered as a reclaimed BISI, buy side balance, sell side efficiency. All right, so let's see if we can vault above that inversion fair value gap. Market basically just fell out of bed this morning. In all honesty, I'm glad that I wasn't with you, because in the comment section, I'm seeing a lot of folks reporting that they're making profitable trades using the tape reading and the opinions and commentary that I give in the Telegram channel. And that's what you don't want to be doing. You don't want to be doing that. And today was so fast that, even if I was giving any kind of opinion, I'm quite certain some women probably would have hurt themselves, because it was violently fast, unforgiving, just kept breaking lower, lower, lower. Which begs the question is, why did I feel that it was warranted to take a long here? Because we had traded all the way down to the low of the morning, just after 10 o'clock. And then at 10:30, we had basically had 1 hour trading. So that's the 1 hour dealing range. And when it's been here we are trading above the inversion fair value gap. So we want to see it trade above it, break above it, and then come back down and retest it. And once it tests it, we want to see it stay away from the lower half of it. But that first hour's trading, that dealing range, when there's been no real retracements on buy side, that's usually a very, very strong setup for my lunch macro, where it basically just retraces into a key high or low. And I'll tell you the rules for it. That way you know. Just let's pan out through this setup with each individual candlestick. Okay, so we came down. Now we left that inversion fair value gap. So then we don't ever want to see it come back down in and trade to the lower half of it. It can come back down and touch it again, but it's beneficial for us if it doesn't do it. Okay, trading back down into a buy side and bell side efficiency, or BISI. Okay, so see how it traded down into the half of that inversion fair value gap? We don't want to see it trade to the lower end of it now. So whenever you're trading my inversion fair value gap PD array, you're looking for that characteristic. You're looking for it to behave and perform that way. And if it does that, your probabilities and odds in your favor go astronomically higher. Doesn't mean it's a perfect trade. It doesn't mean you're not going to have a losing trade eventually. But that's the rules I use and I employ with teaching it and what you see me doing in my examples. All right, so this looks really good for a run up into that lunch macro buy side liquidity pool. I'd like to see some of that stay open on the previous candle. We don't want to see that completely overlap that. Very nice. Very, very nice. Almost like I know what I'm doing. Stand by for a random act of precision. And there she is. All right, so that's probably random. So let's take a look at why I picked that high here. Okay, we saw the market trade lower, obviously, and really no run on buy side. So what I'm showing you here is I'm going to take it back to 10 o'clock because that's the end of the first 30 minutes of trading. So that's your opening range. So that high that forms after 10 o'clock up to this level here are reasonable targets for the lunch macro. So it's the high that forms after 10 o'clock when you're selling short for the day or targeting it, and reverse it for markets that have been rallying higher. There's all my executions. Hope you found it insightful. Until I'll talk to you next time. Be safe.